All right, welcome everybody. Welcome. Thank you for being with me this evening. This is my second office hours. For those of you new, this is we're going to run every 2 weeks. Just make sure you're muting yourself on entry, and just keep yourself muted for basically the first 45 minutes. And then what I'll do is I will open it up to the floor. So today is January 19th, 7 p.m. Eastern Standard Time. This is my office hours classroom. Let's just get into some of the details here. So Danny Naz, as I mentioned, Pup of Wall Street, if you don't know. And yeah, I opened this office hours to my group members as a means to do a little bit of technical analysis review on what's going on in the markets, and then probably do that for about 45 minutes or so. And then I'll open it up for chart requests and then Q&A, question and answer session. We're going to go over some market review, post-market process, hunting for trade ideas, building a watch list, setting alerts, and more. So like I said, chart requests and Q&A session coming up after that. So bear with me 1 second while I get my other screen up. Okay, perfect. Just give me a shout in the chat. Let me know if you can see my screen. Perfect. Thank you, Raina. All right, so what we're going to do is just go over the indexes first, and we'll go through some individual names after. So yeah, I think no surprises. The market has been pretty bloody the last couple of days. If you're in the rooms, then basically you know that I mentioned on a break below 456.23 on SPY, and we are on SPY on the daily chart, that we would probably come into this 450 region that we're seeing down here. So we came pretty close to it today. I'm kind of leaning towards, we'll probably gap down tomorrow. I mean, we came within about 1.5 points, not even, almost about a point from where I thought we might bounce. And really, why I was looking at this area, a couple of reasons. Number one, we had a fib cluster right there, but look at this wick right down to the same area. And then these 3 candles right down to the same area. So you know what I'm going to say next. If we lose this area, I mean, there's no volume from this whole move over here until right about down here. And that kind of jives with my 618 to the downside, 444.69. We also have a swing low anchored VWAP, which you could see. Actually, that swing low anchored VWAP is from up there. Let me zoom out a little bit. Okay, and let me clear that out. And so you can see the swing low anchored VWAP from down here. When anchored here, you're going to see that come right here. And that's where I think we're headed next if we don't hold 450.18, give or take, within I would say a 35 to 50 cent deviation. So that's kind of what I'm looking at on SPY. I don't like to be right, but unfortunately I was right on this call. It's painful. It's painful, but you have to take it in, take a couple of things into consideration. Let's just jump up to a weekly chart. And so when you look at a weekly chart, I mean, look at the move that we've made basically since the COVID low. We had that V-shaped recovery, right here. Let's do this. We had a V-shaped recovery, and, then a steady climb for the most part over the course of the last year and a half. And so when we look at it from a realistic point of view, okay, we had, after this V shape, right, we had a move up, we had a pullback. We had another move up to a similar high. We had a pullback, another move up, we broke out. Again, move up, pull back, move up, pull back, move up, pull back, move up, pulling back. So again, we can't expect the market to go up in,
he went on.
ladies and gentlemen, if you don't mind just muting yourself. please. Thank you. So, in taking into context of a longer term perspective, excuse me, this is expected. We are going to have pullbacks on the way up. Now let's just take a quick look at this pullback right here. Right, this happened over the course of 5 days. We had 2 red days, we had a counter trend rally, we had another red day, and then a spinning top right on that anchored VWAP from that previous high right there, and then we bounced up. And so what are we seeing? We're seeing a red day, a spinning top, another red day. And when you look at the size of these candles, I mean, they're kind of about the same. It's just what's going on in the underlying index is a rotation within the names. And, we're all used to trading the Teslas and the Apples and the CrowdStrikes and, all of those momentum type of, tech plays, those high beta tech plays. And that's not where the money is flowing to right now. In fact, the money is flowing out of those names, and we'll take a look at in terms of what money is flowing into, but it's definitely not flowing into tech. And tech is just looking really, really weak. So we'll take a look at the cues in a moment, but you could see on this move, look at this pullback right here, right to the 34 EMA. So just as a reference, the yellow cloud, the 8 EMA is on top, the 21 EMA is on the bottom, the 34 EMA is on the top on the purple cloud, and the 55 EMA is on the bottom. And so, on this move off of that V-shaped recovery, only once did we come back into that 34 EMA. Most of the time we're coming into the 21 EMA and bouncing, same as what we saw here. This one came all the way down, capitulated right into that 34 EMA, and then we got a nice bullish bounce right off of that. Now look back here. So similar story. It didn't come all the way down to the 34, but we hugged that 21 and then we bounced. So let's just zoom in real quick on price action right now. And, we did lose the 21, but we have yet to come down to that 34 EMA. And I do suspect that's where we're headed. Whether we get, some kind of relief bounce tomorrow and then another capitulation kind of move back down, maybe Thursday or Friday, I think that remains to be seen. Keep in mind, we are in the midst of earnings. Banks are still reporting earnings this week. We've got tech coming up next week and the week after. And so I think, it's going to be really important to, check ourselves in terms of what we're trading. We can't, expect that we're going to see a big relief bounce right away. I think it all really depends on, how stocks report. Now, I could drop some anchored VWAPs from that previous low. If we get down to like that 55 EMA, we haven't tested that yet. And so the question I think we're all asking ourselves is this a short-term pullback and are we going to continue higher? Or is this in context, is this a bigger pullback? And, the one thing that I'm looking at, and, as a technical analyst, I have to keep in mind, I can't have any bias to the upside or to the downside, but I have to just look at the data in front of me and say, what does this actually look like? And to me, that looks like a left shoulder and that looks like a head. And so what I'm thinking might potentially happen is we come down, bounce off of that, make a move back up, counter trend rally, and then come right back down. Then we're going to have our right shoulder form. And so that's something that's, it's a very real possibility. And of course, if that's what happens and we get that neckline, then of course, we're headed much further down. We would have to measure the move there. And that's possibly where I would see us potentially going. So, of course, we have to take it day by day. We can't say that is what's going to happen or potentially what could happen, but we have to take into consideration that that's a possibility. So let's take a quick look at the cues. The cues, again, much weaker than SPY. And you can tell just from the perspective of this channel, you can see we've already lost that particular channel to the upside, or the up channel to the downside. You saw a spinning top yesterday, and then just a candle that lost that 618 at 373.16. And so we've already come down and lost the 34 EMA. So for me, my next stop is the 55 EMA, to the downside. And, just tech looks really weak. It's just looked weak. There's no sustained bounces whatsoever. And if we're looking at this from a longer term perspective, again, we have a very similar V-shaped recovery from the COVID low, but we pretty much are holding that 21 EMA, throughout the run, right? Maybe right here you come down, possibly come close to testing it, but here we're clearly deviating down to the downside. So again, you have to look at these charts objectively and say, this definitely doesn't look like what we're seeing all the way back here. This definitely looks different. And so we have to be real with each other and say that, there's possibly much more downside to come. And we just have to kind of play it day by day. So let's take a quick look at IWM. Again, we're on the weekly chart right now. And let's take a look at this here. Yeah, so you could see pretty much from these prior pullbacks that we held the pullback there, we held the pullback there, we held it there, held it there, held it there, and now clearly we're breaking down here. So a couple of things. Again, could this be a false breakdown? I think in the next 2 to 3 days we'll know, or I would say the next 2 days we'll know. This is the weekly chart. So let's just jump real quick to the daily chart. Let's clear that out. And, we have this anchored VWAP down here at 201.63. We had a falling wedge breakout that retested and then eventually just failed. And I don't really see too much support to the downside. Let's see if we zoom out a little bit. I can take our anchor here, anchor it to that previous low, and you can see we're already losing that volume shelf. And so that's not good, because you could see there's a lack of volume. The problem with this nice move up, it's great on the way up, but what happens is when you get a nice move to the upside, a very, kind of vertical type of move, and no consolidation, you have very little volume to catch you when you start to fall. And so you have to be really careful with your small caps, because this can really start to fall off a cliff. So tech and small caps is really what drove us in 2020. 2021 obviously was a very interesting year in terms of price action. Obviously with small caps, it was just sideways. Tech was up, SPY was up. I think 2022, we're in for a world of hurt, unfortunately. I don't want to be the bearer of bad news, but when you look at what's going on from a macro perspective, with the Fed signaling that they're going to raise interest rates 3 times, that is for an environment where growth and tech stocks get crushed. And, that's what we're starting to see the beginnings of. And that's not to say that we can't recover, but I think, we have to really be cognizant of what the Fed says. We do have an FOMC meeting next week on Wednesday, and they've already signaled that their first rate hike will likely be in March. Just in speaking with other traders that are a little more versed on the macro and fundamental side, a lot of them seem to think that March might signal the capitulation. It might signal, the bottom if the Fed raises rates. And so that would be what I would be watching for. This is really a patience game at this point. But, having said all that, it's not all doom and gloom. And that's the reason for these office hours, because it's really my job to find the shining lights in the darkness. It's really for me, why you're a member of my group is so that I can look for and find the best technical setups. Now, we're going to have to adjust our strategy. We're not going to be playing the Teslas and the big cap type of stocks, the AMDs, the NVIDIAs, those names, they've had their moment, and now is possibly their moment to pull back and consolidate, which, listen, if we're looking at this from an investing standpoint and not a trading standpoint, when these stocks start to bottom and start to consolidate and then start showing some bullish structure, that's when it's time to go long. That's when you're starting to look at, your IRAs and your 401ks, and you're putting money to work. Now is not necessarily the time to be dollar cost averaging to the downside, because we just don't know where the downside is going to lead. And of course, I'm not a financial advisor, and certainly what I'm saying is not financial advice, but I'm a technical analyst and I can only look at what's in front of me. And that's exactly what I'm seeing. Let's just take a quick look at some sectors. So, I'm looking at silver here. When you start seeing sell-offs in the market, I always look to see where is money flowing to, where is the quote unquote safety, right? And normally it's metals, like it's precious metals like silver and gold. And it's generally your value stocks, your staple stocks. We saw this in 2020 when the market was falling. What are companies that are not going to be going out of business anytime soon? Your Walmarts, your Targets, your McDonald's, the businesses that most people will use, not maybe necessarily on a daily basis, but on a regular basis, your Costco's, right? When the economy is hurting, people are going to look to save money. And so they're going to value shop. And that's what we're going to do as traders. We're going to value shop for our stocks. And so let's just take a quick look at some other indices. Actually, bear with me 1 second. I'm just going to stop sharing my screen. I'm going to get into one of my platforms that I use. So bear with me while I log in. Okay, so let me share my screen here. And this is Tradytics. They're an AI generating software, something I've been using for the last 3 months or so. Just trying to get a better perspective and gain a little bit of an edge in terms of what the data is showing us. And so I'm going to go into their scanner. And what I've done is I've loaded my previous watch lists into their scanner. And we can look really quickly as far as what performed well today when the market was falling. So we got SOFI, we got Take-Two Interactive. So the gaming industry, from actual gaming like play type of games, and also the gaming industry in respect to like Las Vegas Sands and MGM, those names actually have been moving. And so that's something that I've been keeping an eye on. That sector is BJK. So we definitely had a double bottom here, breakout. It failed that breakout, but you could see that we are making a series of higher highs and higher lows on the index. And so that's something that I would dig into and see, what names are actually performing well. I could even do this and go to my sector ETFs. And let's see. I don't know why this is showing the way it is. Let me just refresh that. Okay, there we go. So I don't like when the market's falling, I don't like to necessarily look at the 1 day performance. I like to go back to like a 7 day performance. So look at silver over the last 7 days and ignore the sector name. I'm not sure why it all says financial, but just ignore that. But silver, 3% today, 7.8% over the last 7 days, 8.2% over the last 30 days. So money is definitely flowing into silver. XLE, not a surprise here. We've been talking about energy for probably about 6 weeks now. Had a fairly flat day, but up 5% over the last 7 days, up 18% over the last 30 days. Gold, as I mentioned earlier, and these are your EEM is your emerging markets. So a lot of Asian names here. And KWEB, those are your Chinese tech stocks. Think Baba, JD, Baidu. So up 1% today, 1% over 7 days, but down overall 7%. So when we look at a 30-day perspective, XLE, SLV, And jets are going to be your airliners. So think Southwest Airlines, ticker LOVE, and JetBlue, American Airlines, ticker AA, those types of names. But those are really, like, I would say XLE and jets have been actually pretty decent. And when we look at XLE, you could see beautiful cup and handle breakout. We caught that nice breakout, came right to that 1618 extension. You've got your top 3 holdings. I don't, you know, I would imagine most people have cars here, and you're probably putting gas unless you have an electric car. And you're using Exxon, you're using Chevron, you're using ConocoPhillips. And so those are your top 3 names. But when you dig a little deeper into those charts, I came up with OXY, which is Occidental Petroleum. It's got a really beautiful setup. It hasn't, it started to break out, but it hasn't quite moved that much yet. I think there's still a lot of room to the upside there. And there was another name, CPE. We're still forming in this cup and handle right here. So this is another name that, you know, looks pretty good, I think. You know, I think if we get a break over 60, let's say $61, I do think that we could see a nice move to the upside on, actually, let me just fix that real quick. There we go. Over, yeah, 60.55, we could see a move to $69 and then $81. So those are 2 names within XLE that haven't quite moved as much yet as maybe a ZOM, which is your Exxon Mobil. I mean, caught a nice breakout over 66.38, but look at this move, it's vertical. You know, when you look at something like this, look how far extended it is from its moving averages. So this is something I would not be buying into. Could you potentially catch a little bit of a move back up to the upside? Sure. But your risk to reward really isn't there. I'm in the business of buying breakouts and buying pullbacks to key support. I'm not necessarily in this market interested in buy high, sell higher, because you will absolutely get burned doing that. So that's energy. Going back to this, jets. So let's take a quick look at the jets ETF. So we've had a nice rally off of the bottom. Let's take a look at some of these names. I said AA before for American Airlines. It's actually AAL. AA is Alcoa, which actually, let's just take a quick look at it. That's actually a pretty nice chart as well. I believe Alcoa, that's not copper. It's not silver. What is Alcoa? Earnings today. Oh yeah, look at that, earnings. Let's turn on after hours. Let's see. Aluminum, that's it. Yes, thank you, Racer. Thank you, Daniel. So yeah, it looks like a bit of a spinning top here, but looks like buyers stepped in and pulled it higher. So this could be something to watch tomorrow. Let's see how it sets up. But this is a good example too, like metals, copper. Let's look at FCX, right? Beautiful chart. We've been talking about FCX for possibly about 2 months now. The first time it came on my radar was this break of 40, and then we failed there. But the second time it came back on my radar was that re-break of 40. You see how it broke out, retested, and then bounced? I mean, it was just a beautiful, beautiful play. SCCO, I believe, Southern Copper Corporation, another one, right? Falling wedge breakout, still has room to move to the upside. I mean, if we're looking at it objectively, it's starting to consolidate right under its 50% retrace at 69.22. This has potential to move back up to the highs. You know, when it comes to building supplies like lumber, things like that, commodities, well, this also is coupled with inflation. You know, when we have inflation, prices of everything that you're buying in the stores are going up. Commodities are going up. That's why oil's going up. That's why metals are going up. That's why you know, your resources and all of your supplies are going up. And so this, unfortunately, is just reality of inflation. This is, you know, we've spent a lot of money. We've printed a lot of money over the last 2 years, and certainly over the last, you know, possibly 10 years. Eventually, that's going to come to bite us in the ass, and that's exactly what we're seeing. So yeah, I mean, we're seeing a move into the 50% here, but let's go back to jets. Sorry, I got a little sidetracked, but I just wanted to illustrate, you know, where money is flowing into. And so this still looks like a downtrend to me, although it looks like a little bit of a counter trend rally off of it. You can see we pulled back to that 2134 level. We did sell off. So for me, this is showing me it's following what the general market is doing, and that's not necessarily what I want to look at. I know utilities was looking pretty good, but that also is pulling back. Let's take a quick look at NEE. That was a name that we were watching for a while. That's really sold off. Obviously, that was off my radar. But yeah, let's just go back to jets. I keep getting sidetracked. I don't want to look at airliners. They're not fun. Let's look at American Airlines. Yeah, that doesn't look great. Let's look at Delta. That doesn't look great. Let's look at JetBlue. Yeah, not really that. I mean, this is not, it's not terrible, right? It is consolidating in a range, potentially, you know, inverse head and shoulders here, but something I would maybe keep on the radar, you know, something I would just keep an eye on, but I don't necessarily see a trade in there yet. So you could see it's really a struggle to find, you know, sectors that are performing. And so when you struggle to see where the trend is and where the money is flowing into, that's when you really need to start going to individual names. And so let's take a look at my previous watch list here. And something funky is going on here. Let me refresh that page. There we go. So from today, SOFI, I talked about SOFI. This was actually my trade plan this morning. SOFI did get their banking charter approved. So that's one of the reasons, well, that's really the only reason it was on my radar. I mean, this has been in a perpetual downtrend since it hit its highs at 25. So it's still on my radar. I'm still waiting for that breakout, that daily close over 1437. We did get a false breakout today. And for those of you who, watch my videos and understand how, I trade, I wait for a swing trade. I wait for a daily close over the entry point. And, super important, right? Because if you would have taken this breakout entry at 1437, you would be in the negative right now. So really important to wait for that daily close breakout if you are going to take a swing trade. Now, if you were day trading it, then, it was a pretty decent day trade this morning. I mean, it gapped up, pulled back to right to that. Actually, we're on the 30-minute. Look at that beautiful cloud pullback right here. So there was definitely an opportunity with these three inside 30-minute candles to take the break on this candle, take a little bit, if you've got, let's see, from 1350, you got about 75-cent move for you options traders. That could have been a nice play right there. But we're seeing some constructive consolidation here, a little bit of a flag forming. So let's wait to see if we do get that break over 1437. I do really like that trade still to the upside. Take two, possibly looks like it's bouncing. Let's see. This is probably was a little bit of a sympathy play. For those of you who aren't following the news, Microsoft announced that they are going to buy Activision, ticker ATVI. And so a lot of the times when you get news events like that, you get sympathy moves, you get sympathy plays. And so it looks like that's possibly what we're seeing here on Take Two. If we take a look at Activision, monster move. I mean, obviously that's a pretty big deal when Microsoft, which obviously is one of the largest companies in the world, is going to buy Activision, which I would say is one of the premium names in gaming. And for me, this is clearly a metaverse play. They want to acquire intellectual property. Activision has a lot of intellectual property. It serves Microsoft well because they have the Xbox gaming system, but I think everybody's going to start dabbling in the metaverse and getting their hands on intellectual property that they can exploit in the coming trend change to the metaverse. So yeah, I mean, beautiful move. It was like a 30% move, but got rejected right off of the supply zone, pulled back, closed under the 618, but over the 50% retrace. So I'm just waiting for this to consolidate, and let's see where it goes from there. Wouldn't be necessarily a trade for me on the Activision side, but the Microsoft side, you know, that's interesting. I did take Microsoft for a couple of trades today, a couple of quick day trades through 306. If we go down to the 30-minute chart, you could see, let me turn off after hours there. You could see on the first move, caught that move to the upside. If I run my Fibonacci retracement off of this move right here, I'll go down to a 5-minute. You'll see that it actually pulled right back to the 50% retracement. So I'm taking that swing low right there to the swing high right here. Oh, sorry, 618, apologies, not the 50%. Pulls right back to that 618. And that was right at 306, which was my breakout level, which is what we got on that second 5-minute candle. I was able to take the 310s again here. I sold into 310 because that was my target. We caught the top basically twice on this. We did stop at 313, which was a previous level that I was watching from back here. And yeah, it was a pretty good trade. But honestly, it's not the way that I like to trade, but I saw the opportunity. Microsoft was on my day trading radar. And so I took the trade. But again, Nick, I'm more of a swing trader. I like to take longer term trades, you know, days, weeks types of trades, but it's not what the market is offering. And so we have two choices. We can either adjust our trading strategy and day trade, or we could sit on our hands and wait for the market to consolidate and then potentially start to move back higher. So for me, I invest a lot of time and effort into my charts, and I spend a lot of time doing this, obviously. So I don't mind to take some quicker day trades like that. So don't really see, well, maybe VALE, that's actually on my radar right here. So VALE is right there. So VALE had a gap up right here. Let's see. Actually today, and we gapped over that 382 Fibonacci retracement level. So VALE looks pretty good. As you can see here, it was up 4% today, up 10% over the last 7 days, up 15% over the last 30 days. Let's look at Arch. So another one, pretty good setup. Do I know what Arch does? Nope, have no idea, no freaking clue. Arch Resources. They're probably a mining company or a materials company. I don't know. But what I do know, I know technical analysis. And, you know, we had a move into 103.81. We failed, we broke down, we came back into that level. We failed, we broke down, and now we're coming back into that level again, and we're failing. So to me, this looks like a possibly a cup setup here. Let me find my little cup. Where did it go? Oh, my cup disappeared. I can't find my cup. Well, let's do this. That's what this looks like. It just looks like a cup. So what I would watch for is just a potential, you know, move to the downside, maybe a little bit of handle action, and then a retest of 103.62, a breakout, a retest of that breakout, and then a move higher. That's what I do. That's what I wait for. I don't try and anticipate the move. I don't, you know, say this is what's going to happen, so I'm going to do X, Y, Z. I wait for it to actually happen, and then I react to the move. And so, you know, that's what I'm looking for potentially to happen. But if we do, you know, in the next week or so break out of 103.62, then, you know, let's look at what our targets would be. You know, you take our swing high from right there down to our swing low right there. And that's our target. So over 103.62, we could target 114 and 125 to the upside. And it's just a simple Fibonacci extension that I'm using. I really like this because, you know, I love playing round numbers, and, you know, you have $100 basically right below. So if you were to take the break of 103.62, then I would put my stops possibly somewhere around like maybe 95, maybe $94, like right here under this particular low right there. And that might be a pretty decent trade, right? Let's take a look at the metrics. Draw position. So let's say we take the breakout here, and we're targeting that 1618 there, and we're putting our stop loss right under there. That's a 2.37. So I don't really love that. I want at least a a 3-to-1 risk to reward. So I would move it up to that candle low right there. It's a 2.95 risk to reward to the upside. And I'll take that trade all day, every day. 3-to-1 is what I like. Don't really love 2-to-1, 1-to-1. Doesn't make sense for me to risk $1 to make $1. But to risk $1 and make $3, yeah, I'll take that trade. So those are like the risk percentages that you should think about when taking any trade. All right. Mo saying cup is next to RSI. Where is it? Oh, there it is. I don't know how I missed that. All right. Thanks, Mo. Let's see. Let's go back to this and let's go on a 30-day perspective. What's been moving? And so I don't really like BBIG. You know, I don't like stocks under $10. I don't know why I should really take that off my watch list. ATVI, we know what just happened. You know, basically that was just buy the rumor, sell the news type of event. DVN is an energy name. That's pretty nice chart. You know, possibly missed the breakout right here, but you know what I would do in this instance is I would say, you know, let's put an alert on that for the retest, right? Because we haven't gotten a retest on this yet. So I put that down on the 10-minute chart. So we'll put DVN back testing breakout, and we'll let that set for 30 days, and set it and forget it. And so we could just move on from that and just know that, you know, if that comes back into the territory of 45.65, that alert will come into my my phone text message. It'll also email me, and then this little bell will alert me on TrendSpider. So let's look at FANG. FANG actually I like. I believe that's also on my watch list here. And so did catch this 1, 2, 3, wave 4, wave 5 right into the 1618. Can't make this stuff up, ladies and gentlemen. Look at that rejection right off that 1618. So if I extend my broadening formation, we had a breakout and a false breakout off of that extension. But we back tested that 1272 extension at 123.82. So still an interesting trade. If we hold 123.82, I would target 131.58. And then once we break 131.58, then I would watch for a move to the upside for 140.16. Now, I do have this as a wave 5 top. It certainly could be the wave 5 top right there. But what I would do is I would just go down to a lower time frame. And let me see if I can get a wave count off of this. So that looks like a 1, 2, possibly 3, wave 4. Yeah, that might actually be our wave 5 top right there. Just want to double check. So that's 18. We might have a little more juice to squeeze out of this trade, but not really worth the risk, I think, in my opinion. But it was a good trade while it was going. ZOM we talked about. CFG, this is a financial stock. It might have reported already. Let's see. Let's go up to the daily. Yeah, that just reported. So that's down 2.3% on today's report. So let's just watch this for the next couple of days and see what it does. It's gapping down right now. Something I saw that was interesting, I saw a lot of bullish call flow on Wells Fargo. And so that kind of brought my attention. It was like, I don't know, like $4.5 million in premium that came in yesterday, I think. And so, but the only thing with that is the strikes are, I think it was a $50 strikes. So they were in the money strikes or deep in the money strikes out to 2023. So here's another one. We had a channel breakout, false breakout. Now we're back inside the channel. So, and also it lost that 1618 extension. So not something I would necessarily be interested in at the moment, but certainly something that we should keep on our radar. And MOS, that one had a not so great day, but it's been pretty good for the last, this is actually pretty interesting. This I like. Let's do this. Let me put in our neckline. And I'm going to put an alert on this because we had a cup and handle breakout, but you notice we didn't get the retest. And so I'm going to watch for the retest on this. And again, we'll just put in the notes. So we've got MOS, cup and handle breakout. Now back testing. And that's it. We'll set it and we'll forget it. And hopefully we catch a back test breakout on that. So it's 7:46 now. So I want us to spend 45 minutes going through charts based on what I'm seeing. Does anybody have any chart requests? Happy to do some chart requests for the next 15 minutes or so. So if you have any chart requests, feel free to drop them in the chat, and I'll call them up as you call them out. Target, sure. Let's take a look at Target. I haven't looked at that in a while. Let me see how I have that on the weekly. So yeah, it looks like Target reports. I remember why I have all these annotations. One of my coaching sessions, we did a breakdown of this chart. So yeah, let's take a look. So, pretty steep uptrend here. And now, we have been consolidating in that zone. We had a little bit of a false oopsie breakdown here. We tried to get back in. We got rejected. So it's not looking bad. It's not necessarily looking great either. But what I would say is we're at 223. I would say if we can get over 231, I would get interested in this chart, because you could see back here, we've got some wick touches. We had another false breakout, came down, stopped right at that level, rebounded, but then broke down again, tried to re-break back over it here. These three candles couldn't. That fourth candle right here, it broke out and then again broke down, tried to retest it, failed, tried to retest it, failed. So for me, this level, and it's not perfect, but let's see, I would say probably around 231 to 231.50. In that range, I would watch for a break over that level. So let's just set a quick alert on that. And we'll just say TGT, trying to get back into consolidation range. And set that alert for 30 days. And we're good to go. All right, let's take a look at PM. Philip Morris. Go up to the weekly chart.
Stop it. I don't want it. You don't want it? Okay, fix it.
That's interesting. It's coming up to that trend line again. And let's see. Got a previous high right there. It's kind of a swing level, so you're getting a failure there as well. If we break over that level, you could target 123. Yeah, this looks like a pretty interesting chart. Watch for a break over 106, like 106.23. If we get a break over 106.23, then what I would look for is 112, 119, and then 123 to the upside. Let's take a look at Ford. We're actually talking about Ford today. I just think it's extended. I think it's very difficult to be a buyer up here. We just recently broke out of the 2011 highs. If we look at like a monthly chart on this, I mean, look at the breakout that we had here. That was the time to get in. If you're getting in up here, you're chasing. You know, look at the monthly RSI, well overbought, right? Look at the TTM momentum, really high. And look at the MACD, really high. This thing needs to cool off. It needs to consolidate and possibly pull back, maybe retest 1888 or 20 before I would consider getting in. If you've been in, you know, certainly this is something to, you know, possibly taking profits on. But look at, yeah, we got a gap down here. It's already starting to fill that gap. So pretty bad candle right there. If you look back, don't really see that many big red candles like that. That's really just a function of how big this move is. And, you know, just looking at this from a wave perspective, this actually looks like a wave 5 top right here. So, you know, if I were to count this out, you know, it looks like a possible 1, 2, 3, 4, 5. What I'd watch for is an A, B, C move. This makes a lot of sense just from a technical perspective. I would be looking at a $20 retest and seeing if you get a bounce there. Generally, what happens with these waves, when you get a wave 5 top, you get an ABC correction, and the wave C generally terminates in the vicinity of the prior wave 4, and that's basically right here. And that's between 1863 and 1927, give or take. So don't get fooled that you're going to see a counter trend rally at some point. The market's going to continue to go down, and then you're going to have maybe a 1 to 2 day rally to the upside. That's the suckers rally. That's the dead cat bounce. That's the one that suckers in the people who have not seen that before. People think, oh, we've got a couple of green days, I'm going to buy, and they get bought and they buy, and then the market just hammers you down again for another few days. So I'm not a buyer of Ford up here. I think it's just too risky. All right, so Ford, PM, TGT, EWZ. That's a new one for me. This is a Brazil MC. Okay. This does not look interesting. It's in a perpetual downtrend. Let me actually go up to a weekly chart. Yeah, I mean, it's, let's see. It's got a bit of a wedge formation here. For me, it's in no man's land. I don't see necessarily a trade here. It looks like we've lost the volume shelf. What happens when you lose a volume shelf is now you have to contend with all this supply up above. And the problem with that is, you know, anybody that's bought basically up here is bag holding. And so when they get break even, a lot of times people from a psychological standpoint will sell into you, and it just creates this chop zone that is very difficult to break through. It's going to take a long time and then keep in mind, we're looking at this on a weekly chart. It's going to take a while for this to churn through that supply. So I don't necessarily see anything constructive here. CLR, Continental Resources. This looks pretty interesting. For me, this looks like a, let's see, that's a 1, 2, 3, 4, 5, but let's just measure that out. Yeah, this could be our wave. If this is our wave 3, we're already pretty deep into wave 3 territory. What I would watch for on this is when it starts to consolidate. Let's say we're at the top right now. What I'd want to see is some form of triangle forming. Generally, your triangles, that's generally your wave 4. Right now, it looks like it still wants to go a little higher. So we might actually still see some upside in wave 3. But I would personally, if I were, let's say, to think about going long, I would wait for that wave 4 pullback. And we'll know once the wave 4 is forming because it forms some kind of triangle. And once we get that wave 4 forming, then we can measure out where wave 5 would go to. If we're close, let's say we're in wave 4 right now, then wave 5 could come into the territory of these previous highs up here, which puts us at about $81. So yeah, I would wait on this. This is definitely not a wave 4. Generally with a wave 4, you see a 5-wave move, a 5-wave contracting move. So, but it looks pretty decent. Let's take a look at it from a lower time frame. I mean, if you were playing it short term, you could wait for a break over 54 and then target, 59 and then 64 to the upside. But my guess is that once we come into 54.81, we'll probably get some resistance there. We'll chop around maybe a little bit. Maybe we'll form like a handle and then come back up, and then, and then it'll do its thing from there. So, but it looks like a pretty decent chart. Oh, okay. Ford had a recall. Got it. Tesla held 1,000 today. Actually, no, let me take that back. It did not hold 1,000. It was holding 1,000. And I still feel like, we could be in a right shoulder here. Where we're wrong is basically under 903. And we are in the territory of the the left shoulder. So I think if Tesla goes under 979, it's likely not an inverted head and shoulders. And technically, this really shouldn't be an inverted head and shoulders, because the inverted head and shoulders is generally a reversal pattern that you see off of a downtrend. You can see this is clearly in an uptrend. But let me illustrate what a wave 4 looks like. This is a good example. Okay, here's your wave 1, 2. Here's your wave 3 right here. This is a long wave 3. Here's your wave 4 of 3. So let's count it out so you guys can see it. So I'm just going to focus on wave 3. Here's wave 1, 2, 3, 4, 5, right, of wave 3. And then in the bigger sense, you have your wave 1, 2, 3, 4, and then potentially 5 up here. I don't know why I counted it out like that. Let's actually go up to a weekly chart. There we go. Now you can see it pretty clear. So this would be your wave 1, your wave 2 pullback, your wave 3, your wave 4 pullback, and then your wave 5. Now, what I'm doing on Tesla here is I'm trying to count out my wave 5 of 5. Okay, and so you could see here's wave 1, 2, 3, your contracting triangle 4, and I'm watching for that wave 5. So I'm still fairly confident that this is still wave 4, but we can see wave 4 come down. Where we're wrong, where I know where this is definitely not wave 4 is if we go below 699. So we've got a lot of room for this to come down, even to invalidate wave 4. So where I would get cautious is under basically 9, I think it's about, well, like 886. I think under 886, it definitely has room to run to the downside. But for now, my thesis is still to the upside in the medium term. But in the short term, I still feel like we might see some more downside. But It's a tricky play right now. It's definitely tricky. So Raina, you're asking, can you give an overview on what to expect with options expiration? So which options expiration? Are you talking specifically about Tesla or just in general? Okay, let me do one more. I'm going to cut off, it's 8 o'clock now, so I'm going to cut off the chart request. So PANW was the last one. This is Palo Alto Networks. So looks like, you know, just a bit of consolidation. Here's our range. So this is something that if any of you are familiar with Darvis, I would highly recommend, for those of you who are not, look up the trader Darvis. He was famous for making these Darvis boxes, basically like consolidation zones. And basically what he would do is he would wait for the break of the box to compound to the upside. And so that's exactly what we're seeing here. Like you can see consolidation, even though it's a pretty wide zone, it, you know, on this one, it was an earnings gap up. So it just kind of went gap and go. But now we're starting to consolidate again. So, you know, over 573, I think this looks really good. The other way to look at it is buy down towards the bottom of the consolidation zone. You know, you can catch moves from the bottom to the up, you know, to the upside. That would be another way to look at it. And you could see here's another kind of consolidation zone, you know, and then they break out, it moves high, and then it starts to consolidate again. So you're going to you can see this pretty much on any stock. Now, if you weren't interested, right, to take this to the upside, then what I would do is just look at it from a trend perspective. You know, so right now you could see where, actually I'll do a box here. You know, we're still, you know, in a downtrend. So once we break that downtrend, then I think you could think about taking this to the upside. We also have stacked moving averages to the upside. It looks like we got rejected off of. So yeah, I mean, it doesn't look bad. It's not breaking down like everything else, but it's not a great entry here. It's not a terrible entry, but it's not a great entry because you've already made a move off of the consolidation, you know, range bottom. So you're somewhere in the middle. So again, it really depends what type of trader you are. There's always going to be opportunities to day trade any stock. But when it comes to swing trading, whether it be options or shares, I think you have to be really careful with any thesis to the upside. And also in just looking at this again, you know, you possibly have a left shoulder ahead with a small right shoulder here. So, you know, if you see a breakdown of the neckline, that also might be something that is potentially worth shorting. So, all right. So going back to Raina, your question on options expiration. So I think it's too general of a question to answer. So what I can say is, you know, we have weekly options expirations, and then we have monthly options expirations. Now, not every stock has options, and not every stock has weekly options expirations. But generally, the ones that have weekly and monthly options expiration, you'll always see more liquidity in the monthly contracts versus the weekly contracts. So when you have events like the triple witching or the quad witching, that's when you're having, and I think those happen only 4 times a year. That's when things get really tricky because, and I'll have to look up the exact terminology on this, but you're having multiple sectors with options expiring on the same day, which causes a lot of volatility going into that particular day. So hopefully that answers your question. If you need any more specifics, then just let me know. All right, Tapesh is saying he uses Darvis channel indicator on TradingView, pretty useful. Is it possible to assume that some of the buying pressure can resume into tech stocks as we begin to enter the earnings season? Yeah, I think that's a good question. I think earnings season, honestly, because of the nature of what's happening in the market, I think earnings are going to is going to be what makes or breaks us. And you know, so far with the bank earnings, it's been a little mixed. I know JP Morgan reported on Friday, Goldman Sachs reported yesterday, they both were down, but some of the regional banks have actually performed fairly well. So the big banks, not so much, regional banks, not too bad. When tech starts to report, I don't know who reports first, but pay very close attention to the first 2 to 3 big tech reporting. That's really going to be the signal for what's going to happen. And like I said, I mean, next week we also have the FOMC on Wednesday. Expects volatility going into Wednesday next week. And, obviously, depending on what they say, they may signal that, they may, I don't know what they're going to signal. Let's just be real. They may say we're going to delay raising interest rates. That could send the market higher. They may say that they're on target to raise interest rates in March, which was their first signal. That may keep the market neutral, or maybe they raise interest rates faster. I don't know. But if they say that, then watch for capitulation to the downside. Well, interest rates have not been raised yet. So banks will do well, I think, in an interest rate raising environment, but the interest rates have not been raised yet. So therefore, you're not going to see any, forward, projections until that event starts to happen. Yeah, Racer, I definitely think we'll see a move after FOMC on Wednesday next week. And, for those of you who are swing traders, it's a very difficult market to approach right now. You have to be very, very careful. And it's not the time to be going long. There might be, some value stocks that look attractive, and certainly those are the ones, if you are going to be, swinging, those are the ones I would be watching because they have a lot less volatility. But if we're being real, if the market starts to capitulate to the downside, it's going to take mostly everything with it. So there are certainly like inverse plays that you can do. But if you're not well versed on that, really the best thing for you to do now is to just stay in cash. Cash is a position, reserve your mental capital and your physical capital for when the market is easier to trade. Because if you're trying to trade in this market and you're not comfortable trading in this market, this is an easy market to lose money in. Because look at the whipsaw action that we're seeing intraday. Multiple moves to the upside and the downside. It seems like almost every 30 to 60 minutes. So it could be really, really frustrating if you're a trader and you're not used to this environment. But if you're not, this is really, if you're in this for the long haul, if you're thinking like I love trading and I want to do this for a long time, then you really need to start paying attention to when these events happen, because this is like studying game film for athletes. Let's just say like football players, right? They don't just come into a game unprepared. They study game film. They know who their opponent is. They see their moves. They know their formations. And it's the same thing with trading. You need to study the charts that you're comfortable with. You need to focus in on a handful of names that you're really, really comfortable with, that their levels, and how to play off of their levels. There's definitely something to say about, keeping it simple when things get really tough. Don't overcomplicate it. Don't use, 15 different indicators thinking that, you're going to get the holy grail, because trust me, the holy grail doesn't exist in trading. It is a myth. And, you're only going to be fooling yourself. What you have to focus in on is developing a system that works for you. Now, not all systems work all the time. So part of it is learning patience and learning, when to play, and when you're playing, how much size to use, right? If the market is choppy and your stock is going up, size down if you're going to take a position. If the market is going up and the sector is going up and your stock is going up, then, you could put some size on. You could put, your foot on the gas a little bit. But, not everything is equal, and you have to really become accustomed to how the market is reacting. It's not just about the stock you're in. You have to consider its sector. What are the other names in the sector doing? And you have to consider the overall market. What is SPY and the Qs doing? So you have to really have a more holistic approach to trading if you want to find consistency and basically profitability over the long term. The market is an instrument that it's not designed to go up all the time. Over the long term, if you zoom out, yes, it does go up over time. And that's why, value investing and investing in ETFs and good, long-term names over the long term makes a lot of sense. But if you're thinking about trading, that's a completely different story. And that's where you have to really focus on technical analysis on a multi-time frame, point of view, so that you're understanding exactly what's going on, on all time frames. So we've got a couple of minutes. I don't know if there's anybody else that has any questions. Yep, VXX or the VIX is also a good gauge for volatility. We did see a spike in volatility today. It wasn't a huge spike, but it was a spike nonetheless. You can see here over the last 2 days, we're back over that center channel. All of these spikes back here, the VIX has been in a downtrend since the COVID high, or excuse me, the COVID low. It's an inverse basically to the market, but you can see all of these spikes, these volatility spikes right there, right there, right there, right there, right there, there, and there. And so the question is, do we get another volatility spike over the next, couple of days or weeks? Probably. But as the volatility spikes, it starts to drop off, right? It spikes, it drops off. It spikes, it drops off. So after it spikes, once it starts to drop off, that is the time to think about going long. All right. General question on identifying supply and demand zones. What's the ideal time range? It depends. Like if you're day trading, I would look at, let's look at Microsoft. So what I would do from Microsoft's point of view, I would anchor my volume profile to the previous swing high, and that's going to show me where my supply and demand zones are. So right now, this was a demand zone, but now because price is below it, this is going to act as a supply zone. That's going to act as supply zone. And then when we get above that, that will act as supply, and that will act as supply. And let's look at maybe Tesla. Yeah, that's a good example. So you could see we're below supply here, or we're below price. So that's going to act as a supply zone. That's going to act as a supply. That's going to act as supply. So on a 30-minute time frame, this is more for day trading. If I'm looking at it from a bigger time frame, like let's say for swing trading, then I would go up to, let's say, my session or my daily chart, and you can see right now we're in a demand zone. Excuse me, we're in a supply zone. But if we lose this supply zone here, then we're probably heading down to our demand zone, which is right down here. Look at the volume gap right here. Okay. What happens is, if price comes into the volume gap, there's no supply or demand to hold it up. And generally you get a quick move to the downside and it'll stop right at demand. So that's basically how you would use supply and demand from a swing trading and a day trading perspective. It's all about the time frame. Day trading, I would use the 30-minute and below. Swing trading, I would use the 2-hour, 4-hour daily and chart and above. Ali Seitz is asking, curious, Dan, do you manage your long-term retirement accounts in ETFs or do you actively trade? I actively trade and I do ETFs. So what I generally will do in moments like this is I'll just put hedges on. I'll buy like SPY or QQQ puts a little further out, maybe a few weeks out. The thing that's tricky with hedging is the market has continually gone up. So hedges are meant to go to zero, but I don't want them to go to zero, and I will close them out as they come into profit. Where hedges really protect you is possibly in a time like now where we might see bigger downside. But the other way to look at it is, your long-term, and again, I'm not a financial advisor, so please understand that. Your long-term account is exactly that. It's long-term. And so what I would look for is in the names that you really love, if they start to pull back, watch for areas of support that you could possibly, add, some long-term shares into. That would be one perspective to look at it. If you look at names like Amazon and Tesla and Microsoft, look for what potentially could be the new Amazon or Tesla or Microsoft. Invest in the companies that have longevity, invest in the names that are actually, doing things that aren't overvalued, that aren't hyped, the ones that are going to steadily move up over time, regardless of the periodic drawdowns that you get. Yeah, Tapesh, I'm going to post this video possibly tomorrow morning. Generally on the longer videos, this is about 1 hour and 20 minutes. It does take Zoom a little while to process. So, but that's about it. That's an hour and 15 minutes. I really do appreciate everybody that's joined. Do appreciate your time. Want to be respectful of everybody's time as well. So that wraps up this session. I hope you learned something, and I hope I answered your questions. This is why I do the office hours. I want to give you guys and gals a little bit of an overview on what's going on in the market, but I want this also to be educational. I want to reinforce, everything that it's in my videos. I want to introduce new concepts of things that I'm going to be, creating instructional videos on. And I just want to keep it, light and fun. Obviously, the market is anything but light and fun right now, but everything is a learning experience. And certainly for those of you who are new traders, new meaning in the last 2 years, you're only scratching the surface of what the market is going to do. We haven't seen everything that the market has yet to offer at us. So it's important to really pay attention to these events that happen, and how it affects the overall market and the individual names that we trade. So really important just to be a student, right? No matter what you do in life, if whatever your career is, whatever your job is, you're only going to get better if you're just a student. And if you want to do this for a long time, you have to be a student. And I'm a student of the market every day, every week, every month. I'm always trying to learn new things. And as I learn new things, I'm certainly going to pass that knowledge on to you all. So thank you. Yeah, office hours every 2 weeks on a Wednesday. I only send the links out to the group members. Yeah, just make sure you're on my newsletter. Make sure you are watching the different channels and watching your email. The next one will be in 2 weeks. So that puts us at February 2nd. So yeah, I mean, for those of you who are in my room, obviously I'll see you tomorrow. But for those of you who aren't a member, certainly consider joining. You could DM me on Twitter. I'll send you over a link. But if not, you're possibly just a member of one of the free channels, and I will always send out these review videos. But if you're not a member, there's definitely a lot more to this, and I have a lot more to offer. So highly recommend that you join up. So in any event, have a great evening, great day for those of you who are on the West Coast, and I will catch you all in the markets tomorrow. Take care all.